Hi, let's talk about Sports Entertainment Acquisition Company. It's a SPAC company that have been founded last year, and they did the IPO last year, and so they have less than 3 years of financial data available. So there's pretty hard to calculate the fundamentals in pretty much any acquisition company because. Even lately they had no M&A plans and whatsoever, but the prices are still volatile. I think they are still searching for the investment, and yeah, I kind of don't like to review those companies, but since many people uh, like research and search for information of that company, I kind of have to avoid people's money losses. And yeah, as you can see here, so I think many of investors who have been like believed in acquisitions companies, and yeah, so they do like good if you are enter the index fund or ETF on the IPO. But lately it's like booming and pumping up, and as you can see here in mid-January the price were at around 1080, then it drops to the 978 currently. So many of investors have been losing the money, so my mission is to avoid that situation where people just enter in whole cash, whole kabam, and they're sitting like minus 30%. So my mission is, at least if you're entering those kind of stocks, at least you're doing with 1% of the portfolio, so that doesn't hurt so much, and you can pretty much wait for the growth or for the M&A news that they are merging with some of the company, or the acquisition news. But anyway, market performance, we see here only 90 days, and yeah, I think they made an IPO in November last year, so there's a halfway through to the 1 year return. But anyway, 90 days return, almost minus 7%, and long-term price volatility considers a lowest compared to the industry, which were more than average market volatility. Based on PB ratio, I think this is currently overvaluated a lot. And unfortunately, on the SPAC companies, as usual, if they are less than 1 year on the market, so not any side have know the price target for the company. And as we can see, this short term downtrend, and we'll see, because there's I think a support level at around 960, but it could drop even less than that. So I think many of the companies who were before the IPO, they they are pretty much selling in, I think the rule was 180 days from the IPO they could possibly sell. So this means pretty negative signals that they made to the IPO. They pumped the price, then it's dumping down. So it's kind of highly volatile share price, and pretty risky to enter. And you cannot like made of the company based on the fundamentals researches, because there's for example, future growth is not for the company, but it's for the industry that they're working in. And yeah, it's called diversified financials industry 10% and 15% to the past performance, and the company is currently unprofitable. Financial health side, we see here that it's debt free, but they do not have any reported data whatsoever. Latest 31st of December last year. Balance sheet looks green. They're not paying dividends. Ownership breakdown, so nobody. Currently we don't see insider trading volumes, but there's top shareholders. So there's last month added Sports Interim Acquisition Holding. So did they do kind of buyback or so? So it's 15th of March. So 15th of March, somewhere around here. So 10:08. Anyway, it fortunately we don't have on the others, but Blackstone is here. The Bronson, Periscope. I don't see here, for example, BlackRock or Vanguard Group, because those are one of the biggest that enter in possible companies. Anyway, simple safe dividend shows that shares outstanding are pretty much the same, 56 million of shares. And also investing.com summary the stock for long-term investors as a neutral, by technical indicators as a buy, and moving average neutral. Thanks for watching this video, subscribe to the channel, like the video, and see you in a future one.